All right, so we're going to switch gears a little bit today.
Yeah.
We usually do deep dives into earnings calls here on Talk Tickers, but
Yeah.
there's some breaking news that's just too big to ignore.
For sure.
The Container Store.
Yeah.
The mecca for anyone who's ever dreamed of a perfectly organized pantry
Right.
has just filed for Chapter 11 bankruptcy.
Yeah. It's definitely a headline that makes you do a double take.
Right.
You would think a company known for tidy solutions would have their own finances in order.
Right.
But that's what makes this deep dive so interesting. It's not a sudden collapse.
Yeah.
It's more of a calculated strategic move.
So let's break this down for our listeners. What does Chapter 11 actually mean? It's not like they're shutting down immediately, right?
No, not at all. Chapter 11. It's basically a way for companies to hit pause on their financial obligations and to reorganize their debt. It's like getting a financial makeover. The Container Store isn't going away. They're planning to keep all their stores and their website up and running. And they're saying it's business as usual for customers. Orders will be filled, and they're committed to keeping their employees on board as much as possible.
So why file for bankruptcy at all if they're planning to keep operating? Seems counterintuitive.
Well, their financial picture is, it's a bit messy, to say the least. They're currently carrying over $243 million in debt.
Wow.
Compared to just $11.8 million in cash.
Oof. That's nuts.
That's a pretty tight squeeze. So Chapter 11 gives them some breathing room to restructure that debt, renegotiate leases, and basically try to get back on a more sustainable financial path.
So it's like they're hitting the reset button, but they're not doing this blindly. They've secured $40 million in new financing to keep things running during this restructuring process. And importantly, they have the backing of the vast majority of their lenders. At least 90% are on board with the plan, which is crucial for a smooth restructuring.
Absolutely. That lender support is a big deal. It shows there's still confidence in the Container Store's brand and their potential for a comeback. But it's worth asking, how did a seemingly popular retailer end up in this position?
Yeah, let's unpack that.
Yeah.
A lot of factors have been swirling around the retail sector lately. There's that post-COVID hangover effect.
Right.
Remember how everyone went on a home improvement spree during the pandemic?
Oh, yeah.
Well, as life went back to normal, that spending on discretionary items like fancy storage solutions cooled off significantly.
Exactly. And that slowdown was compounded by inflation. People are much more price sensitive these days.
Sure.
Making those premium price storage solutions a tougher sell.
And then there's the housing market slowdown we've been seeing. Fewer people buying and selling homes means fewer people needing to outfit those homes.
Right.
Which directly impacts retailers like the Container Store.
It's a chain reaction. And let's not forget the ever-present competitive pressure. Online giants like Amazon and big box stores have been muscling into the home organization market, offering similar products at lower prices. It's a tough landscape for specialty retailers to navigate.
Yeah, it's like they're getting squeezed from all sides. And speaking of pressure, the Container Store isn't alone in this. We've seen other recent retail bankruptcies like Big Lots and Party City, which signal some broader trends at play.
Yeah, these aren't isolated incidents. These are indicators of a shifting retail landscape, one where consumer habits are evolving and e-commerce is playing an increasingly dominant role.
Right.
This brings us to an interesting side note, the Bed Bath & Beyond connection.
Oh, yeah.
Just a couple of months ago, the Container Store announced a deal to feature Bed Bath & Beyond products in their stores, almost like a team-up of struggling retailers.
It was seen as a potential lifeline for both brands, especially with Bed Bath & Beyond's recent troubles. But this bankruptcy filing really throws a wrench into that plan.
It does. And the company that bought Bed Bath & Beyond's brand actually pulled out of a $40 million investment deal with the Container Store, citing concerns about their financial stability. They saw the writing on the wall even before the bankruptcy news broke.
It's a reminder that even seemingly strategic partnerships can be vulnerable to the undercurrents of the market.
Absolutely. And while we're analyzing the business side of this, it's important to remember the human impact. There are about 3,800 employees at the Container Store whose livelihoods are affected by this. The company says they intend to maintain their workforce.
Right.
But there's undoubtedly a lot of uncertainty and anxiety for those employees.
Yeah, it's a stark reminder that these corporate decisions have real-world consequences for people's lives. So where do we go from here? The Container Store is taking this drastic step to try and navigate these choppy waters. Will it be enough?
That's the million-dollar question, isn't it? They're betting that Chapter 11 will give them the flexibility they need to restructure, re-strategize, and hopefully emerge as a stronger, more adaptable company.
It's a high-stakes gamble, and we'll be watching closely to see how it unfolds. But for now, let's take a little detour from the serious stuff and have some fun with our This Is Not Financial Advice segment.
All right, I like it.
This is where we put on our speculative hats and cook up a potentially outlandish trade idea inspired by the news. Today, we're taking a cue from the Container Store's situation and asking, what if their struggles are a sign of a bigger shift in consumer spending?
Interesting.
What if people are moving away from spending on their homes and more towards spending on experiences? We can play this with a stay-at-home versus going out trade.
I like it. So how would that work in practice? What would we be looking to buy and sell?
We could short a basket of stay-at-home stocks companies that thrived during the pandemic, but might be losing steam now.
Okay.
Think home improvement retailers like Home Depot, Lowe's, furniture companies, that sort of thing.
Okay, so betting those will go down.
And on the flip side,
We go long on going out experiences. Companies that benefit from people spending on travel entertainment and dining out, airlines, hotels, restaurant chains, those are all potential plays.
so we're talking about a pretty broad market rotation here.
Exactly. And for those who really want to juice the returns and the risk, we can explore options strategies to leverage our positions. Ooh, always a tempting proposition. But before we get too carried away, what are the potential catalysts that could really make this trade pop?
Keep a close eye on upcoming earnings reports from these companies.
Okay.
Any signs that confirm or disprove this spending shift from staying in to going out will be crucial. And economic data, too. We'll need to see if consumer spending patterns are actually aligning with this thesis.
Right, and we can't ignore the potential risks. A sudden economic downturn could hurt both stay-at-home and going-out sectors, and any unexpected news or events could throw this trade-off course.
And of course, we have to emphasize that this entire segment is for entertainment purposes only. This is not financial advice.
Absolutely. We're just having some fun exploring potential market trends. Always do your own research and consult a financial professional before making any investment decisions.
Now let's delve a little deeper into the Container Store's restructuring plan and see what clues it might hold for the future of the company and the wider retail landscape.
Let's do it. Yeah, that trade idea is definitely one to keep an eye on. But let's step back for a moment and consider the bigger picture. What does the Container Store's bankruptcy really say about the state of the retail sector as a whole?
Right.
Is this a sign of more trouble to come?
That's the question a lot of investors are asking right now. We've seen a string of retail bankruptcies this year, from big names to niche players.
Right.
It's starting to feel like a pattern.
And it's not just a coincidence. There are some fundamental forces at work here that are putting pressure on the entire industry. Consumers are tightening their belts as inflation takes a bite out of their wallets. Discretionary spending, which includes those impulse buys of colorful storage bins, is taking a hit.
Yeah, it's easy to see how those trendy storage solutions become less appealing when you're worried about making ends meet.
Exactly. And we can't ignore the elephant in the room, the rise of e-commerce. The pandemic poured gasoline on that fire, and now it's reshaping the entire landscape of how people shop.
It's the Amazon effect in full force. Why trek to the mall when you can get pretty much anything delivered to your doorstep with a few clicks?
Convenience is king, and that's a tough battle for traditional brick-and-mortar retailers to win. Especially for a company like the Container Store that built its reputation on the in-store experience. Those perfectly curated aisles, the helpful staff,
Right.
it's all part of their brand.
That aspirational organization.
Right.
You walk into a Container Store and think, my life could be this tidy.
Yeah.
But that magic might not translate as well online.
You're right. Clicking through product photos just doesn't evoke the same feeling. It's like the difference between browsing a cookbook and actually tasting the dish.
Right.
So the big question becomes, what's the future of retail in this evolving world? Are malls destined to become ghost towns?
It's a pretty dramatic scenario, but I think it's too early to write off traditional retail entirely.
Yeah,
But retailers do need to adapt or they risk being left behind.
absolutely. It's about creating a seamless omni-channel experience,
Right.
blending the online and offline worlds, offering personalized recommendations, leveraging data. It's not just about selling products anymore. It's about creating an entire ecosystem that caters to the individual shopper's needs.
The companies that are thriving in this new landscape are the ones that has mastered that blend of digital and physical. Nike or Sephora,
Yeah.
they've built a sense of community and experience that goes beyond just buying stuff.
They're selling a lifestyle, a sense of belonging. And that's something the Container Store could potentially tap into even as they restructure. It's about redefining their value proposition. Maybe it's less about selling individual bins and more about selling complete organizational solutions. Customized design services, online workshops, they could become the personal trainer for your messy closets.
I love that analogy. It's about becoming more than just a store. It's about being a resource, a guide.
Exactly.
Yeah,
They have a loyal customer base. They just need to find innovative ways to engage them in this new retail landscape.
it's a tough challenge, but not an insurmountable one. We've seen other retailers pull off similar transformations. Look at department stores that reinvented themselves as lifestyle hubs or grocery chains that embraced online ordering and delivery.
It's about constantly evolving, staying ahead of the curve, and understanding that consumer preferences are always shifting. Maybe this Chapter 11 filing is the catalyst. The Container Store needs to spark that reinvention. It's like those chaotic before photos in a home makeover show. Sometimes you need to tear things down to build something better.
That's a great point. But before we get too carried away with optimism, let's take a closer look at some specific elements of the Container Store's restructuring plan.
Okay.
What details should we be paying attention to?
For one, how do they plan to handle their lease obligations? Retail real estate is a major expense, and renegotiating those leases could be crucial to their ability to become profitable again.
Right, if they're stuck with expensive leases in underperforming locations, that could be a drag on their recovery.
Exactly. We also need to consider their vendor relationships. How much leverage do they have to renegotiate payment terms with their suppliers?
Right?
If those vendors get spooked and start demanding upfront payments, that could create a real cash flow crunch.
And then there's the question of consumer confidence. Will shoppers be hesitant to buy from a company that's gone through bankruptcy?
Especially if there's uncertainty about the future of the business or if they think the quality of products or service might decline, these are all critical factors that will determine whether the Container Store can successfully emerge from this restructuring and write a new chapter in their story.
Yeah, it's a high-stakes game, and there's a lot riding on their ability to adapt and innovate.
And as always, we'll be watching closely to see how it all unfolds.
Yeah.
But for now, let's take a quick detour and unleash our inner contrarians with another round of This Is Not Financial Advice.
All right, let's shake things up again with our favorite segment.
Oh, yeah.
This is not financial advice.
I love it.
It's where we get to let our imaginations run wild and cook up some truly speculative trade ideas.
That's right.
Today's idea is inspired by all the talk about uncertainty and economic headwinds we've been discussing. What if the Container Store's struggles,
Yeah.
along with these other retail bankruptcies, are a sign of something bigger brewing?
Interesting. Okay.
What kind of contrarian play are you thinking about?
What if we go back to basics, to a classic safe haven asset?
Okay.
What if we go long on gold?
Gold. That's an interesting twist. I wouldn't have immediately connected those dots, but
Yeah.
I'm curious to hear your reasoning.
Think about it, the Container Store situation, the broader retail weakness, the housing market slowdown, persistent inflation,
Yeah.
these could all be signals of a deeper economic instability than many are predicting.
So you're thinking fear could drive investors to seek refuge in gold, that classic safe haven asset.
Exactly. When confidence in the market wavers, gold tends to shine.
Yeah.
It's a store of value that's held up for centuries, even when other assets are tumbling.
So how would we play this? Give me the specifics.
This isn't a quick flip trade. We're thinking about a longer-term horizon here, positioning ourselves for a potential macro shift. A simple way to get exposure would be going long on the GLD ETF, which tracks the price of gold bullion. It's liquid, straightforward, and a good way to start.
Solid choice. But what about something with a bit more leverage for those who are feeling a bit more adventurous?
For those with a higher risk appetite, we could look at call options on gold mining stocks. Companies like Newmont Corporation or Barrick Gold could see their share prices take off if this gold thesis plays out.
Okay, I'm seeing the potential here. But options come with their own set of risks, right? We have to be cautious.
Absolutely. This is purely hypothetical, and we're not suggesting anyone bet the farm on this. It's about understanding potential scenarios and managing risk accordingly.
So back to our gold trade. What events could really kickstart this move? What should we be watching for?
Keep a close eye on upcoming inflation readings. Any surprises on that front could send gold prices soaring. Also watch the Fed. If they signal a more dovish stance, that could weaken the dollar and make gold more attractive to foreign investors. And of course, any escalation of geopolitical tensions would likely send investors flocking to safe haven assets like gold.
So any cracks in the facade of stability could be the catalyst.
Right. And remember, there's always the potential for a self-fulfilling prophecy. If enough investors jump on the gold bandwagon, that buying pressure itself can drive prices higher, attracting even more buyers.
It's herd mentality in action.
Exactly.
So how do we know when to cash in our golden chips, so to speak?
We can set price targets based on technical analysis or fundamental valuations of gold. Trailing stops are also a good way to lock in profits and limit potential losses as the trade develops.
So it's about having a plan even when we're exploring speculative scenarios.
Exactly. And remember, this gold trade can also act as a hedge against uncertainty.
Right.
Even if our stay-at-home versus going-out trade falls flat, gold could still perform well if the economic picture deteriorates.
It's a way to diversify and potentially cushion the blow if things get rocky.
That's the idea. But to reiterate, this is all purely for entertainment purposes.
Yeah.
We're not registered financial advisors, so always consult a professional before making any investment decisions.
Couldn't agree more. We're just two guys with a passion for the markets, exploring possibilities and having some fun along the way.
Well said. And on that note, we'll wrap up this episode of Talk Tickers. It's been a fascinating deep dive into the world of retail bankruptcy and speculative trading.
Who knew organizing bins could spark such a thought-provoking conversation?
It just goes to show there are always connections to be made, trends to analyze, and opportunities to explore.
That's what keeps it exciting. Thanks for joining us, everyone. Stay curious, stay informed, and, as always, happy trading.